Hi, it's Larry Gaines, Power Cycle Trading. In this video I want to show you a couple of trading opportunities that I'm looking at for next week, and it's going to be on Tesla, TSLA. Now a couple of things I want to point out. First is that Tesla's had its earnings, so you don't have to worry about that. So the earnings were this last week on the 19th, and it had a nice pop to the upside, and pretty much for the last 2 days, here's Thursday and Friday, stayed sideways, held this range with the low of 206. So what you want to look for are pre or post earning type of trade setups. So there are basically four types of trades that you can look at around earnings season. The first is like leading up to earnings, and a lot of times volatility increases, so a stock may go up or down based on that increase in implied volatility. And then the other one is maybe a pre-earnings announcement that maybe they're revenues, or they might miss or do better, and you got a big spike. And then the third is after the earnings release. You know, like right here, you place the trade on the close, and you're looking for some kind of non-directional trade for it to either go up or down. So you can structure trades based on that. And then the fourth trade is to look for trade setups based on post-earnings moves. So you want to look for stocks that have a tendency based on past performance to trend in the direction of their earnings release. So in this particular case, Tesla has a really good high probability tendency to trend in the direction of its earnings. So earnings were released here on the 19th, spiked up here. So based on past earnings, Tesla should directionally trend to the upside. Now that's barring any major market corrections, but just based on Tesla's history, that's the case. Let me show you why. So here's Tesla. Here was the earnings back in November, and it had a really strong move to the downside. Here's the next day after earnings, and you see it trended for about 2 weeks to the downside. Here was its earnings in August of last year. You can see it kind of was like this earnings, had a down close, then an up spike up, trended back down, held the cluster moving averages, and trended up for a long time. And then its earnings back in May of last year, similar trend. It closed down, spiked up, and trended higher. So this is a good stock based on past performance to look for a post-earnings trend to the upside based on what it did this past earnings. So based on that bit of information, I'm going to be watching my time frames. I'll be looking at a 30-minute hourly time frame. I'll be keeping an eye on the daily, and I'll be looking for a pullback, and on pullbacks into these moving averages, if we get back into this 8 EMA, something like that, around 201, I'll be looking for a trade setup. Now I'm also going to be watching for a compression squeeze break up or down using my shorter term indicators like the 1 hour and the 30-minute time frame. So I'm going to be monitoring those, looking for the optimum time to get in on Tesla. Now the trade that I'll be looking at will be doing a bull put credit spread. So what I like to do is look for the optimum time to get in based on my trading model when I see a break to the upside or downside. In this case, I'm looking for a potential break to the upside once we have some consolidation. And when we get that, so assuming that that was today, I would be looking to put first, I do kind of a basket of option trades, but I like to always do for a long trade a bull put credit spread, because it gives me the opportunity to take profit or make profit even if Tesla was to go sideways to even down some. So the first thing I'll do is to make it real simple, I'll come over and look for the appropriate statistical implied move based on the market makers. In this particular situation, based on the price of 209.60 on the close Friday, I'd be looking to come down and look at selling let's see, I'd be looking at about the 192.5 or about the 195 puts, and then buying the 190 puts, and for a credit of $70 a contract. So that's a credit, and basically what that will provide me is a trade where I'll make $70 a contract by expiration next Friday. I think that's like March the 28th of February, and my risk is 430. So within 1 week, if this trades sideways to even down some, my potential profit on that will be $70, and return on capital would be 16%. So that's not a bad return on your capital with a defined risk. So if you'd like to learn more about that, I'm going to be doing a extensive course on credit spreads this next Saturday, March the 1st, and let me give you a few details on that. So if you'd like to learn how to use credit spreads for income, with a probability of success of over 80% just right out of the gates, then I hope you'll join me this next Saturday, March 1st, for boot camp, where you'll master just that. I'll be sharing what I've learned in almost 3 decades of a very lucrative trading career, trading options for one of the top firms in the world, and where we would trade literally billions of dollars in a day. So you'll get strategies that can generate income no matter what the market or the economy does, with lots of time with me for Q&A and support. So if you'd like to learn more about this, please go to this link here, which you'll see on the email. But we're going to be covering how to structure trades to stack the odds in your favor, using weekly options to catapult your returns, where to find the highest returning credit spreads, how to have winning trades regardless of market direction, and this piece right here, a powerful model to increase odds from 70 to 80 or to 90%. This is worth the price of admission right here. So I hope you'll join me and a few other traders that are committed to increasing their profits. It'll be this coming Saturday, March 1st. So please hit the link and sign up now while there's still spots available.